So, as a lot of you probably know, Palantir stock is currently down more than 20% from its highs this year, in large part because of disappointing earnings that spooked investors. And even though it is currently still up more than double its IPO price from 2020, I actually think that Palantir stock is a pretty good pickup on this dip right here, especially for anyone that is not yet in the stock and was looking for an entry point. This could be a great option. And so, in today's quick video, I'm going to give you 5 simple reasons why I feel this way. Let's go ahead and jump straight into it. Reason number 1. The earnings weren't even that bad. In fact, I actually thought that they were pretty good, with sales not only rising by over 20% in the quarter, but more importantly, profits actually soared by hundreds of percents on practically every metric available. And yet the stock actually declined because of what investors felt was really not strong enough guidance, which even there, it wasn't even off by that much in my opinion, but that just goes to show really how incredibly short-sighted the market can be at times while ignoring the most important metrics of all. And for me, that's the pattern of success that we've been seeing lately. You know, for a while there, Palantir was actually getting criticized for a substantial slowdown in growth, notably through the second half of 2022 going into 2023. But since then, quarterly revenue growth has re-accelerated again in each of the past 3 quarters, reaching back up to over 20%. And even more importantly, their margins have showed incredible strength despite the weak macro economy, with their operating margin getting stronger in each of the past 6 quarters in a row. And by the way, when you add these 2 metrics up together, you get the rule of 40, which is reason number 2, along with consistent profitability. See, the rule of 40 is a common metric used in finance, but especially for up-and-coming software companies, where you add the revenue growth rate with the profit margin, and if the result sits north of 40%, then it's probably generating a profit at a sustainable rate as opposed to facing cash flow or liquidity issues. Well, in the case of Palantir, an AI software specialist, they not only hit this mark consistently, but the past 3 quarters have even soared well above that too, reaching 57% in the last quarter alone, and that's very impressive. And just as impressive, what Wall Street should really be talking about, in my opinion, is that Palantir is no longer a cash burning kind of spec stock, but rather one that has turned a GAAP net income profit in each of the past 6 quarters in a row, reaching a record high this latest one, and that should easily continue going forward as well. But perhaps what makes all of this the most impressive of all is when you consider the actual environment that they've accomplished all of this in, and that's reason number 3. You know, just this last year, over 90% of CEOs were actively preparing for a recession, and you can see that on this chart here too, showing business confidence, which rose right after the pandemic because of all the stimulus, but then proceeded to absolutely crash into the ground when we were left with gigantic inflation and rising interest rates that continue to cripple our economy to this day. And it's not just businesses, but you can also see that in consumer confidence as well, which had a very similar result. And yet, can you believe that during this economy, during this horrible environment for Palantir, they actually grew their commercial customer count by nearly 70% year over year? How insane is that? It just really shows how in demand their services are. And that brings me to reason number 4, which is their incredible work in AI, data management, and what it all means for the future. Look, AI software alone should be worth trillions of dollars in the future. Most people believe that. It's talked about a lot by analysts. And look, Palantir is at the forefront of this movement with their AI-powered data management and analytics platforms that help both government and commercial entities run better, safer, smarter, and more efficiently. In fact, you want to know why they continue to grow their customer count by so much? I mean, just look at the Conference Board's quarterly CEO confidence report. This latest quarter showed that by far the biggest and most pressing concerns and priorities for organizations out there are cybersecurity, legal uncertainty, geopolitical instability, AI, artificial intelligence, new technologies, financial and economic risks, supply chain, and health risks like the pandemic and such. And well, guess what? Palantir specializes in all of those areas, every single one of them. And for the sake of time, I'll just kind of dumb it down here to just a few quick points. But you look at cybersecurity, for example, Palantir has their InfoSec division, and just look at their mission statement: stop terrorism, develop new medicines. By the way, Palantir did a bunch of work during the last pandemic too. Not a lot of people know that, but also, gain an edge in global financial markets. Of course, finance instability and uncertainty, that was a big concern. Combat trafficking, lots of other things too. And look, Palantir wouldn't be constantly getting awarded new contracts with the military if they weren't one of the best at these things. Last quarter, for example, they were awarded a new contract with the US Army worth $178 million for their new Titan next generation deep sensing platform, powering the Army's first AI defined vehicles that will have access to powerful space, aerial, and terrestrial sensors for targeting and providing all kinds of enhanced information out on the field to assist with mission command operations. It's pretty interesting stuff, but that's not even what I'm focused on the most as an investor myself. I actually care much more about the commercial side of things, because that's where I see more scalable growth opportunities. And right now government is bigger, but the growth there is a bit more limited, hovering in the low double digits. However, commercial grew by 27% worldwide and a whopping 40% in the US last quarter. That's huge, especially, again, considering the economy. And a big reason for that is their new AI bootcamp program, where they go to companies and they train their employees on how to use AI within the Palantir ecosystem to improve their operations, which has seen huge results. I mean, Trinity Industries, for example, they said it was like doing 4 months of work in a single day. It's absolutely crazy. And just last quarter alone, Palantir completed another 660 new bootcamps, with around 1,000 organizations having already gone through it. General Mills, for example, said they're already saving $14 million a year from implementing their AI platform to only a single part of their network. And I just think that you're going to continue to see more and more growth from all of these areas in the future. The AI Bootcamp, by the way, is just such a great marketing strategy, isn't it? Like telling companies, hey, we'll come train your employees. Let us show you the amazing things that we can do on our platforms with our technologies, and you're going to love it. You're going to run better. Your company is going to be more efficient. Things will get better, and you're going to see the results. You're going to see actionable results right away, and that's going to make you want to sign up for all of our services and platforms. It's just perfect marketing, and it's also at the perfect time right now during the whole AI craze, which has been blowing up. So I love to see that as an investor. But of course, what good is a company on fire if the stock price is insanely expensive, right? Well, reason number 5, I actually think that the valuation isn't as bad as people make it out to be. Now, revenue growth is still hovering above 20% a year, which I do feel is pretty strong, but even stronger than that is their profit growth, hovering above 80% expected over the next 5 years. And as such, their PEG ratio of 1.6, I think that's pretty fair. That's also about the same as the sector. I think it's even a little lower. So that's pretty good to me, because this is a company that I feel is much better than most of their peers in terms of growth and performance and future potential. I mean, their addressable market alone should be worth north of trillions in the future, yet, right now they're only doing a couple billion in sales. So I feel that there is plenty of room to keep growing there. And while I agree that the stock is certainly not cheap, I do still feel that it is worth picking up some of the stock on any dips, like the one that we're currently seeing right now. Because when you factor in everything else into the complete picture, the whole thing actually turns out to be pretty reasonable in my opinion. And that's especially the case for anyone that doesn't already own the stock. As for me, I of course own it in my personal portfolio, and I also have some of it in our community portfolio as well. And it's a stock that I love for the future, and I know that I will continue to add to it on future dips too. So anyway, those are my feelings about everything that's been going on with Palantir so far. I'd love to hear your thoughts and your opinions on it. Let me know down below. Do you agree or disagree with anything I said? Thanks again for stopping by, my friends, for this quick video. Hope you enjoyed it. I'll catch you in the next one. All right, take care, everybody. Bye-bye.